Hello, this is Adam Zuercher with Hixon Zuercher Capital Management with our July 2018 Economic and Market Update. Today I'm coming to you from our brand new office on the third floor of our current building. Before we get started on today's update, I want to give you a tour of our brand new office. Come on in, follow me. So here's our waiting room and our reception area. One of our conference rooms here. And our large conference room with seating for up to 12 people and a window view of West Sandusky Street, downtown Findlay, Ohio. Our break room. And here's where one of our wealth advisors will sit, Josh Robb's office. Up to 8 people will be sitting out here as part of our operations team. And here's our innovation lab where all the creative ideas happen. On our whiteboard, awesome space. And here's Tony's office. Don't you like the wallpaper for his office too? It'll match all of his nice ties. And now my personal favorite, my office. Don't you like these window treatments? I hope you enjoyed the tour of our new office. As you can see, we do have a little bit of work to do before we move in. For those of you who know where we're already located, we're going to be in the same building as our current office. We're just moving up a floor to the third floor of the building. Stay tuned to social media. We're going to be posting updates on Facebook and Instagram with progress pictures along the way. We're very excited about the new move as it gives us plenty of space for future growth so that we can increase our services to our clients and continue to expand our firm well into the future. So we're now halfway through 2018. And so far, markets have given us a lot to think about this year. As you might remember, in January, stocks hit an all-time high here in the U.S. Then, concerns about interest rate increases caused stocks to fall back a bit, and we officially had a correction during February. Next, stocks began to rebound with positive economic data and corporate earnings growth before trade tensions brought on the current economic volatility. These fluctuations have brought on mixed results for the market. During the month of June, the S&P 500 was up 0.5%, while the NASDAQ was up 0.9%, and the Dow Jones Industrial Average dropped 0.6% for the month. For the first half of 2018, the S&P 500 was up 1.7%, while the NASDAQ was up 8.8%, and the Dow was the only index that has been negative so far this year with a return of negative 1.6%. So as we look at all of the economic data and political headlines over the past month, we do have some mixed results. While unemployment hit its lowest level since 2000, GDP actually missed expectations, although some economists are saying GDP growth could come in as high as 5% for the second quarter. Also on investors' mind was the second increase in interest rates from the Fed so far this year. That interest rate increase came in the month of June, and when announcing the increase, the Fed was very optimistic about the economy. They also indicated that it is very likely that they will increase rates 2 more times this year, although we expect it to continue to be at a very measured pace, probably 0.25% increase each time. Throughout the month of June, we also had a number of geopolitical headlines. President Trump met with North Korean leader Kim Jong-un, although despite high expectations, the meeting had little impact on the stock market. Concerns about a trade war, however, did affect the market for the month of June. From Canada to the European Union to China, trade tensions between the U.S. and many other countries continued to rise. The U.S. added tariffs to the goods of some of our largest trading partners, and they also added tariffs in response. The news has impacted the stock market, but overall, the market has continued to be relatively stable. It seems that the fundamentals of the market and the economy are outweighing the news of a trade war. And we expect those fundamentals to continue to drive the market for the rest of the year. As we move into the third quarter, we will certainly want to continue to monitor the trade tensions. But that won't be the only thing that matters. Corporate earnings will also be key. economists are saying that corporate earnings are likely to increase up to 20% this quarter. If the results come in as expected, this quarter would be the second fastest quarter in earnings growth since 2010. The markets seem like they're on a seesaw between strong economic fundamentals and escalating geopolitical tensions. We will continue to look for a balanced view of the market and the economy. With all of this back and forth, we will continue to seek a balanced perspective of what is truly going on in the market and the economy. Well, that's it for this month's Market and Economic Update. Again, this is Adam Zuercher with Hixon Zuercher Capital Management, signing off with our July 2018 Market and Economic Update. Remember that nothing we say here today is a recommendation. If you have questions on your specific situation or questions about your portfolio, please give us a call at 419-425-2400. You can also visit our website at hzcapital.com, and you can enter your email address to subscribe to our weekly commentary on the market as well as our monthly video updates. Thanks for watching. I hope you're having a great summer. We'll see you next time.